Good afternoon, guys. It's Saturday, May 14th. My name is Dave Coker, and this is Talking About Finance. All right, we're starting out today by looking at the S&P 500 year to date. And my gosh, color red manifests across the board. Energy is about the only solid performer sector-wise. Aside from that, every sector's got losers, some more than others. And look at tech. Holy cow. Been pounded on in an amazing way. Amazon, I'm actually very, very surprised looking at Amazon. It's performing so badly. It'll be interesting to see how Bezos is no longer there, how they turn it around, the new management. It's going to be really, really fascinating. Keep in mind, guys, this has been the worst start to a year since 1932. I can thank my stock market almanac for that. It's even more amazing in that the market hit an all-time high on the first trading day of 2022. So what happened this week? Well, S&P 500 finished down about 2.4% on the week. It's now down about 15.6% year to date. The VIX traded up to 35 on Tuesday, but it declined from there, and it closed the week at 29. So that's welcome. This has been an awfully exciting market, to be honest with you. I'm having the time of my life. I just wish I had more cash in the States so I could buy more stocks. I'm fully invested. I think I've mentioned that before to you guys. Fully invested at this point. The 10-year note closed this week at 2.93. It's up about 1.4% year to date. Oil closed the week at 110.33. It's up about 0.5% week on week and about 46.7% year to date. Sharp rise. Now, here's the thing, guys. You can't call the bottom of a stock market decline, so don't try to time the market. Just stay fully invested. You get some cash, take a look, buy something. You have to stay fully invested through an entire cycle. Keep in mind, high volatility in the stock market hasn't really lasted that long historically. And fully 100% of the time when we see volatility reside, we see strong equity market returns after the volatility eases. Now, the reason for this is simple. There's been an awful lot of indiscriminate selling and forced liquidations, which is presenting some excellent opportunities for long-term investments. And the prices are potentially attractive. There's some really, really good bargains out there. Now, I buy only dividend-paying stocks, and if prices have fallen, we're seeing huge yields in some of the names that I own. For instance, one company, I won't name them, the yield's approaching 20% current yield. So that's money I want. And yes, I'll take the risk of additional near-term market declines, as that dividend is absolutely lovely, because I just want the cash flow. I'm not going for capital gains, never really did. Oh yeah. In terms of capital gains, of course I bought Bitcoin yesterday, Friday, like I do every week. I've been doing that for years, and I bought Ripple 4 days last week as well. So it's really interesting time to get going into the markets, and you got to think about how you're going to deploy your capital and how you're going to make money. An idea could be buying a house. And this is really wild. What we're doing is we're taking a look at the mortgage payments to income, the ratio actually. And you can see we've hit a high that's reminiscent of the valuations we saw. It was about the 34, I believe, right before the global financial crisis, driven by the mortgage market in the States happened. Not predicting that again, simply saying you got to be careful, guys. If you need a place, buy it just because you need it. Don't buy it to, let out and stuff like that. Be very, very careful. These prices are highly elevated. And in fact, we know when we start to look at what's going on, I love anecdotal indicators like this. So yeah, it might be a housing market peak. It's entirely possible. Why is Wells Fargo laying off people? Well, they're not doing it because business is booming. Without a doubt, their demand is falling. These mortgage rates are really, really high right now relative to where they've been over the past, say, 3 years. So they're relatively high now, and demand for houses, in particular with the prices and stuff, is falling. So that's why Wells Fargo's letting people go at this point. Another thing to keep in mind is that inflation has been chewing up lots of different stuff and pushing up house prices as well. It's also been driving up food prices. And guys, I've shared with you, I lived abroad, meaning I've lived in the Middle East and Africa. And it's terrible that when food prices go up in the West, most of us just sort of shrug it off. We've got to pay more money for food, and maybe we'll have less money for other things. But in many, many developing nations, when we see food prices spike like this, they go from eating maybe 3 meals a day to 1. Or maybe they go from having meat every day, 1 portion, to having it only on holy days, special days, once a week maybe. Or they might even, when they have kids, not feed the kids. So I always pay attention to this stuff because people will put up with a lot of garbage, but when they can't eat, just think of the cause of the Arab Spring, kicked off in Tunisia, because a gentleman immolated himself because he couldn't feed his family. He tried to, and I'm so ashamed I can't remember his name, he tried to sell some tomatoes in a town square, didn't have a permit, got caught by the police, they smashed the tomatoes. He was so ashamed. He lit himself on fire, killed himself, and that kicked off the Arab Spring. So yeah, I think we're going to see some political instability in developing markets. It's entirely possible. And it could even happen in the United States. Right off the wonderful Fred site, this went out in one of my research notes this morning. Off the wonderful Fred site, I recommend you sign up and mess around with the data. It's really cool. What I've done here is I baselined average hourly earnings, CPI for food and beverages, and CPI for all items. And I baselined it at 100, May 1st, 2020. And we can see now, we get to May 2022, CPI is trading at 112.7, CPI food 110.8, and earnings 107.2. Not really keeping track, the earnings with the costs. And people, yes, unfortunately, are getting squeezed in the US. They're getting squeezed in the UK. We are unlikely to have the political instability, but these people do vote. And yeah, it's going to be interesting to see what happens at the next probably wave of elections coming up in the States in particular. Why don't you just get away from it all? Well, it's going to cost you, right? So if you're inclined to leave Western countries or the United States or whatever to go someplace else, look at this CPI for airfare. Now, what we're doing here, guys, is we're looking at U.S. domestic. So we're not looking at international, but my God. And you can bet, I can't get the data for international, but you can bet it's going to reflect the same type of increase. It's all driven by fuel. Their fuel costs are surging, and they can absorb some, they can shrink their margins a little, but they can't shrink them and they can't run at a loss, so they're passing the cost along to the consumer. Now, that being said, I've seen interviews and stuff, and it seems like demand for tickets is pretty strong because people have been locked up for a long time and they want to go places, they want to do things, they want to see other people. So yeah, we're seeing good demand, strong demand for travel. It's more and more expensive. Oh, and let me introduce you to my good friend, Tina. Tina, of course, stands for There Is No Alternative. And I just wanted to put this out here because people, when we see these big drops and people tend to they panic, they get emotional, and they sell. And I know myself well enough, guys. I'll tell you right now, during the global financial crisis, when I started seeing losses in my portfolio, things day after day, things selling off, I just didn't look at it for about a month. For about a whole month, I didn't look at my portfolio. Trying to do the same thing now, just not looking, don't really care. I get the dividends. All I check to do is see if did the money come in? Yeah, that's all I care. But watch this. You can see that really your buy and hold, your long-term bet is stocks. And what we're doing is we're looking at the value of $1,000 in 1926, tracking it all the way up to the present, and it's over $14 million. So yeah, guys, when you're looking for an investment, I like houses, I like bullion, I love stocks, and you should too. Really, there is no alternative. You have to own other assets, you have to diversify, but you should build the foundation of your wealth in stocks, and my view is dividend-paying stocks. Don't buy these bogus names, the garbage names, Netflix. My God, it's down 71% this year. Why would you buy that? Buy something that pays a dividend and get paid to hold the stock. And it's actually a really good way to achieve financial independence. We'll talk more about that in later presentations. I did want to put this up when we're talking about stocks. It's under Bitcoin because I feel that Bitcoin, you shouldn't try to trade it. You just want to buy and hold it. And this is interesting. Now, if you don't read Wall Street Bets on Reddit, you definitely want to read Wall Street Bets on Reddit. It's actually a good time, right? And somebody crunched the numbers, looked at some data from Robinhood and some of these other trading apps, and they figured all the money these people made is gone. They've actually lost. Why? Well, they didn't really take money off the table. And instead they bought, they held, that's good. But when you're trading these stocks, these meme stocks in particular, you definitely want to take profits off the table. At least cover your capital that you put in to open the position. That's always a good trading strategy to do. They didn't do that. They take pride in not closing their positions. Well, you get what you got coming to you. And it's really terrible because some of these guys, and we've seen brokerage statements. There was one guy this morning, I was talking on the Telegram channel. I put it on WhatsApp with the family as well. He has lost $20 million and he's going bankrupt. He's going to lose his home, and it's really amazing. How did he end up losing $20 million? Well, he leveraged, and he didn't really understand margin. He didn't understand the instruments he was trading, and he got whacked in a major way. So don't do that. Just buy and hold. Of course, here we're talking about Bitcoin. Don't try to trade Bitcoin. Just buy it and hold it. Just hold it for a long, long time. It is going to increase. It almost will, simply because there will only be 21 million Bitcoin ever mined. We've already mined about roughly 19.7 million. Of that, some people figure 20% of the 19.7 or so million have been lost. I know I give Bitcoin to students. I used to. And yeah, I have no illusions. I think probably over 90% of the students never bothered to do anything with the Bitcoin I gave them. Lost the keys, and I have had people come back and say, hey, that Bitcoin you gave us? Yeah. Can you help me? I can't help you recover because I gave you the Bitcoin, gave you the key, and it's yours. But in any case, this is off Plan B's work. And what we're doing here is we're looking at the price of Bitcoin, and then we've got the blue lines. The red line is the price of Bitcoin, and we got the blue lines talking about the 2 standard deviation range. The black line is the forecasted price according to the stock to flow model. So you can see here, guys, we're trading down clearly. We've gotten hit in a major way. Terra and Luna did not help. We know that drove a lot of the price drops in Bitcoin, and it didn't prevent me from buying. But aside from that, we're still on track. And one thing you got to keep in mind is that every 4 years with Bitcoin, we go through a halving. The rate of resupply of Bitcoin, the rate of production of Bitcoin, the mining rate is cut by 50%. We had it on May 24th, 2020. You can see the prices since then. They've gone up. We've got another one coming up in May 2024. I have no doubt that the price will rise after that or even before then, simply because the rate of creation, the mining rate of Bitcoin is slowing. Even as demand increases, even as acceptance increases, even as many, many more people want to try their hand and hold a little Bitcoin, not to mention the institutions that are moving capital into this market. So yeah, take a jab, take a flutter, so to speak, buy yourself some Bitcoin, park it, just buy and hold and do dollar cost averaging. So in other words, what I do is I buy the same amount of Bitcoin every Friday. I've been doing that for years. I did take roughly 1 year off, right when Bitcoin hit about 68,000, 67,000. I was out of the market at that point. I wasn't buying regularly, not because of the price, because it started to really dominate my portfolio. And I was thinking, gee, maybe I should sell some. I didn't sell some in the end. I just went back to buying more. So I was out of the market for about 9 months or so. But aside from that, I've been buying Bitcoin for years, once a week. And you should too. Okay, guys, that's it. Hope you have a great weekend. Keep in mind, nice trading week coming up. We're all going to make some money. So if you got capital, don't sit in cash. Deploy it in the market. Buy some stocks, buy some bullion, buy some Bitcoin. Ripple's pretty risky. But if you're a gambler, if you're a risk taker like I am, go for it. Take care, guys.